Hello everyone, this is our daily top 5 gainers and top 5 losers analysis for July 18, 2019 in preparation for the last trading day of the week, Friday. And today I'm going to talk about 10 different stocks. After giving you my technical analysis, I'll show you what I see on my trade and volume distribution and true market sentiment charts. After which, I'll give you my overall sentiment together with my recommendations. Everything that we're going to talk about here is for short-term trading purposes. Should any of these 10 stocks begin at a price lower or higher than the dominant range that I will mention, make sure that you request for the latest trade and volume distribution and true market sentiment charts in our private clients forum. Let's begin with the first stock in our list. We have Security Bank. SECB closed today at 187.4. It broke above its previous resistance at 184.6. So that one is acting now as its current support. Resistance, the immediate resistance is at 213.5. The 10 SMAC D combo is alive, and the upward momentum is about to become very strong. It's just about 2 to 3 points away from getting that confirmed strong upward momentum level. So we just have to see Security Bank. Maybe once Security Bank touches the 190 level, we will be seeing the ADX getting a score of 25 points or above. The risk level of Security Bank remains low. RSI is approaching. It's close to its classical overbought level. So those of you who may have had Security Bank, make sure that you are monitoring Security Bank, especially when we're talking about your trailing stop loss. Okay, the foreign investors registered a net foreign buying worth 52 million pesos today. Now let's take a look at the trade and volume distribution to see if the fantastic four signals are present. I have verified that they are present. The dominant range is between 187 or 185. 187, we're going to include this one at the bottom. That would be 185.7 to 187.5, closer to the intraday high than the intraday low. This is the true market sentiment chart, and it tells us that the true market sentiment is bearish. Why bearish? Because 4 of the top 10 brokers registered a positive net amount, while only 5 of them registered a higher buying average than selling average. What does this tell us? Meaning to say, there's not much the majority of the top 10 brokers are not that bullish in terms of buying a significant amount of shares above 187.4, the previous resistance. So it's all the more, indeed, that we all have to be vigilant on our trailing stop loss. Besides, I mentioned a while back that RSI is approaching the classical overbought level. So be watchful, be alert. Okay, now if you don't have, by the way, I'm still bullish on Security Bank. So if you're asking me if you have had Security Bank and you're asking if you can top up, I suggest that you hold your position for now. Hold your position for now. If and when it breaks above 190 and the fantastic first signals remain present, then that's the time that I suggest that you top up. For those of you who are asking if they can enter a new position on Security Bank, I suggest that you buy on breakout a little bit further or higher than 184.5. Maybe once the price touches 188 or 189, reassess if the fantastic first signals are still present. Then you can go ahead and do a test buy within the latest dominant range during that time. Of course, you will have to post a request in our private clients forum for the latest TVD and TMS charts of Security Bank or any stock you would like to know. So there you go for my assessment and recommendation for Security Bank. Next is Tech. Tech closed today at 17.5. Support remains at 15.85. Resistance is at we can consider 24.5 as the resistance, which is in confluence with a 61.8% retracement of the down Fibonacci. Okay, there you go, 24.5 right here. Okay, the 10 SMACD is still present, but we are seeing a towering red candlestick here. And when you know that, when it's a red candlestick, a red volume bar, you know that the fantastic four signals are not around. So what does this mean? Okay, by the way, before that, tech has a high risk level, FYI, especially to the newbie traders. This is a high risk stock already. And despite the appearance of the validation of our 10 SMACD combo, if the fantastic four signals are not present, I encourage those who are yet to enter, those who are planning to trade the stock, to postpone that plan. At least wait for the fantastic four signals to become present. Okay? So I've given you my advice for those who are planning to enter tech, for those who are planning to enter a new position in tech in advance. Okay? Now let me show you the trade and volume distribution chart of tech. The dominant range is closer to the intraday low than the intraday high. That is between 17.5 to 18.5. The true market sentiment of tech is bearish. And these are the reasons. I'm going to post the statistics in our private clients forum so you can read the details there. Okay? So, what's my advice for those who may have had tech? Hold your position. Don't top up yet. Okay? Hold your position. And by the way, for those who are yet to enter a new position in any stock, not just for these 10, you have an extra process that you need to go through, and that is the calculation of your reward to risk ratio. Revisit the quick start guide if you are a new subscriber, or if this is the first time that you've heard of the word or phrase reward to risk ratio. These people who have had tech, I may not be advising them to calculate their reward to risk ratio if they have some go signals to top up, but they went through that process as well. They also calculated their reward to risk ratio in the beginning. Okay, that's part of our system here. You have to comply to that process so that you can be a disciplined, process-oriented, data-driven trader. Okay, so again, if you have had tech, hold your position. Don't top up yet. Don't top up yet. Hold your position, of course, if it's still moving above your trailing stop loss. I think that goes without saying. That's why I'm not emphasizing it in the very beginning. At the very beginning, okay. I am bearish on tech. Right after that, after tech, we're going to talk about MRC. MRC closed today at 0.37. Support is at 0.30. Resistance is at 0.37. It's at the brink of breaking above that resistance. Once it breaks above 0.37, 0.49 will act as the next resistance level. The 10 SMACD combo is very alive. The upward momentum is about to become very strong. We need to see MRC breaking above 0.37, maybe around 0.38 or 0.385 for us to get a very strong upward momentum category based on our DMI chart. The risk level of MRC is low. Okay, take note. RSI is approaching the classical overbought level. Take note that it has already touched the classical the resistance level. So if you have had MRC, be vigilant. Watch the price movement by the second. Any moment from now, these folks may consider profit taking once it breaks above 0.37. Okay? Familiarize yourself with the behavior of stocks every time the RSI approaches the classical overbought level. And once the price is touching the resistance area as well. Okay? So, foreign investors registered an insignificant amount of net foreign selling on MRC. So, we're not going to factor in that. Okay. On the trade and volume distribution chart of MRC, I would say that the fantastic four signals are present. The dominant range is between 0.36 to 0.375. The true market sentiment chart of MRC is bullish. I'll post the statistics in our private clients forum. My overall sentiment for MRC is bullish. For those who have had MRC, hold your position for now. Entertain the idea of topping up once it breaks above 0.37, provided the fantastic four signals are present. For those who are asking if they can enter a new position, wait for a breakout. You are better off buying on breakout, provided the fantastic four signals are also present. And before you push the buy button, before you request for the trade and volume distribution chart, make sure that you calculate your reward to risk ratio. Okay? That's an extra process that you need to go through. I'm talking to the new entrants. Okay? There you go for MRC. After MRC, we have Nickel. Okay, nickel. Nickel closed today at 2.43. It broke above the previous resistance at 2.35. That is now acting as its current support. Now for the next resistance, let me plot one here. Okay, somewhere here. So the next resistance is somewhere near 2.66 as a precursor to 3.06. The 10 SMACD combo is still present. The upward momentum is about to touch the strong upward momentum category. We will have to see nickel somewhere going past the middle, the median between the support and resistance for the DMI to give us a very strong upward momentum category for nickel, but it's already getting there. The risk level of nickel is low. RSI is still distant from the classical overbought level, so it still has enough gas, more gas, to try to inch closer to the next resistance near 2.66, just in case the fantastic four signals continue to become present every single day. Okay? So foreign investors, by the way, they registered net foreign selling worth 2.18 million pesos today. And they have been on a net foreign selling mode for how many days in a row? For 11 trading days in a row already. Okay. Nonetheless, their net foreign selling amount is not higher than 5 million. Not higher than 3 million. 5 million, yes. There you go. Let's check the trade and volume distribution chart. Okay, the fantastic four signals are present. The dominant range is between 2.39, 2.4 rather, 2.4 to 2.43. The true market sentiment chart, the true market sentiment for nickel is bearish. Okay, so it's bearish. What does it mean? Be vigilant on your trailing stop loss. It has just broke above the next resistance, so there's a possibility, there's a brewing possibility for the price of nickel to retrace, to rebuild its upward momentum by breaking below 2.35 once again. So let's see. You have to monitor nickel closely. If you have had nickel, you have to monitor it because there's a chance for profit taking to happen now that it's moving above the 2.4 level. Okay, so be vigilant. If I were you, I would request for the latest TVD and TMS charts in our private clients forum after a few minutes of trading, after a few minutes from the opening bell, if you have nickel. Okay, so now how about those who don't have nickel but are planning to enter a new position? You can do a test buy within that dominant range. Just do a test buy, never go all in because of that possibility that I have mentioned for those who have had nickel. Okay, I am bullish on nickel. So after nickel, we have ABG. ABG closed today at 17.7. Support is at 11.75. Resistance is at 19.2. And the 10 SMACD combo is present. The upward momentum is 2 points away from getting that classical, from getting that strong upward momentum category. We will get there once the price touches 19.2 or 19 pesos and above. The risk level of ABG, okay, FYI, listen to this carefully. The risk level is already high. And RSI has already touched the classical overbought level. So be careful, be watchful. There's a strong possibility for profit taking to occur, to happen, to be entertained once the price revisits or touches 19 to 19.2. Okay? Foreign investors, so they registered a significant net foreign selling today. So we will not factor that in. We're not going to factor that in. Okay. So let's take a look at the TVG chart, TVD. Okay. So this is the trade and volume distribution chart. The closing with respect to the closing price of 17.7. The dominant range is between 17.7 to 18 here. 17.7 to 18. That's your dominant range. And where is it closer? It's closer to the intraday high than the intraday low, but it's quite closer to the median. It's quite close to the median of the intraday high and the intraday low. That's why I have a risk averse sentiment for ABG. That's why I have advised you a while back to be vigilant as profit taking may happen near 19 to 19.2. The true market sentiment chart of the true market sentiment for ABG is bearish. Okay, there's not only a few members of the top 10 brokers list are uh, heavily interested to buy ABG at a higher price closer to 19.2. So that's another reminder for you to be vigilant if you have had ABG. For those who are planning to enter a new position, you're better off buying near support if it bounces away from 19 to 19.2, or you buy on breakout. But I don't suggest that you enter a new position right now. You either buy near support or you buy on breakout. Of course, provided you are happy or satisfied with your reward to risk ratio, and provided you know where the dominant range is. And that means you have to request for the latest TVD and TMS charts in our private clients forum before you complete your assessment on ABG. Okay, there you go. After ABG, we have WLCON. WLCON closed today at 15.7. It breaks below its previous support at 15.7. That one is now acting as its current resistance. So the new support now is at 14 pesos per share. The 10 SMACD combo is already absent. It has been absent since June, since the last week of June. Foreign investors registered a net foreign selling worth 48 million pesos today. So they were the ones who dragged the price down. The downward momentum is about to get strong as soon as the price, once the price touches 14 pesos, it's already a confirmed strong downward momentum. But nonetheless, the risk level is still low, and RSI is approaching the classical oversold level. So let's see, let's see if WLCON will translate this midterm support near 15 pesos as a rebound zone. Let's see. So mark that 15 pesos per share. Okay. Let's take a look at the WLCONs here. It's closer to the intraday low than the intraday high. That's your dominant range, which is between 15.7 to 16. Okay, the true market sentiment for WLCON is bearish. They are not buying the dips yet. Okay, so I am bearish on WLCON. Don't enter a new position, and by now your trailing stop loss must have already been hit. So respect that once it gets hit. After WLCON, we have SSI. SSI closed today at, okay, let's see. The chart is not pulling back up. Let's take a look at this. Okay, it's moving. Okay, it got stuck. Let's give it a few seconds. So let's see. After SSI, what do we got? SSI, PHA. Let's see if PHA will appear. So how about SSI? Okay, SSI does not. Okay, it does not appear. Let's check if it has a new stock code. No, it does not have a new stock code, so it should be SSI still. So we will go back to SSI later. For now, let's skip that one. Let's check PHA. PHA closed today at 0.82. Support is at 0.78. Resistance is at 1 peso per share. It just continues to move sideways. Its positive and negative DMIs are still intertwined. They don't diverge. They don't want to leave each other. And the ADX score is below 25 points. So this is a confirmed sign of a consolidation. And this is not new. Consolidation started as early as March as early as March. Okay, so the 10 MACD combo is not present. RSI is approaching its downward sloping, going towards the classical oversold level. The risk level is low, but doesn't mean you should buy it just because it has a low risk level. So for the trade and volume distribution chart, let's see. Here, it's closer to the intraday low, 0.81 to 0.83. The true market sentiment for a PHA is bearish. They are not yet buying the dips by a massive level. Okay, I'm bearish on PHA. Don't buy it yet. Don't buy it yet. There are no buy signals yet. Okay, after PHA, we got PPG. Okay, PPG closed today at 5.71. It retracted after it did not manage to continue its ascent above the 5.96 resistance level. So 5.96 maintains its position as the current resistance, and support is at 4.76. The 10 MACD combo is still present, but the fantastic 4 signals are no longer around. Okay, take a look at this. Risk level is already extremely high. Okay, for the newbies, stay away from stocks that have a high to extremely high risk level. RSI already hit the classical overbought level, and that could be the reason why profit taking was entertained when it touched the 5.95 to 6 peso per share level. Okay, here's the trade and volume distribution chart. It's quite groggy. It seems like everything is a dominant range. It's erratic. There's a lot of noise on the TVD on the trade and volume distribution chart, but the dominant range here, most of which is in favor of the sellers between 5.71 to 6. Most of which, if we're going to look at it, if we're going to assess the entire picture, between 5.7 to 6. The true market sentiment chart for PPG, it's a neutral. So they are also, well, obviously profit taking was heavily entertained on Thursday because of this tall volume. It's higher than the 10-day volume average of PPG. So do you still have PPG? I suggest that you preempt your trading stop loss, lock in your profits. Don't top up. If you're planning to enter a new position, no, not yet. Fantastic first signals are not present. Don't enter a new position. Okay? So after PPG, the last, we have green. Green closed today at 2.35. Support is at 2.25. Resistance is at 2.9. But there's a midterm resistance somewhere, 2.6. 2.6, somewhere near 2.6. Okay. There you go. Okay, 2.6. If it breaks above 2.6, it will be then more likely for the ascending price to touch 2.9, provided the fantastic four signals are still present. Okay. On the other hand, the other indicators here are still a downward sloping. The 10 MACD is already absent. It's already absent. Okay. And they are downward sloping also, the other indicators. Okay. The dominant range is between 2.34 to 2.36 in favor of the sellers. The true market sentiment chart is bullish. It's bullish. Does it mean they bought the dips? I don't think so. They may be bullish, but volume isn't that high. So there was not a strong appetite in buying the dips yet. If there was a strong appetite, we should be seeing today's volume engulfing yesterday's volume, but it does not engulf yesterday's volume. So I'm still bearish on green, and I don't think I should give an advice. I should give a piece of advice for those who may have had green. You should have already, your trailing stop loss should have already been hit by now. Unless you're going to joke me by saying you have a 50% trading risk tolerance. Okay? I don't suggest entering a new position yet until the fantastic four signals are present. Therefore, I am bearish on green. Okay? So let's check SSI. I don't understand why SSI does not pull up. Okay, let's do that again. So from my demo chart, demo account. Okay, market. Yeah, I'm using a First MetroSec Pro. If you are subscribed for 1 year, please send me an email so I can request for your FMS Pro account to be activated for free for 2 months. If you are subscribed for 1 year, okay? Are you subscribed for 1 year? So let me know, and so I can forward your details to First MetroSec Pro so that they can give you free access. And if you are not yet using your First Metro Securities as a broker, you can send me a request. I can forward your details to them so that they can open an account, so that you can open an account with them, so that you and I are using the exact same broker, so that you can see the exact same interface that I'm seeing, the same features that I'm using. I can have them allow you to open an account for free. Okay? Here, our SSI closed today at 3.42. Support is at 3.12. Resistance is at 3.63. The 10 MACD combo is not present anymore. It's about SSI is already in a consolidation phase since the beginning of July. Okay, risk level is low. RSI is downward sloping. Foreign investors registered a net foreign buying worth 7.8 million pesos today, but the fantastic four signals are absent. So the trade and volume distribution chart is showing us that the dominant range is between 3.39 to 3.45, closer to the intraday low than the intraday high. The true market sentiment chart for SSI is bearish. So my overall sentiment for SSI is already bearish. I suggest for those of you who have had SSI, if you're if you're if it's still trading above your trailing stop loss, I suggest that you sell a few tranches now. A few tranches if you don't want to sell everything, or if your trailing stop loss has not been hit yet. At least lock in some profits to some of your shares. Okay, but don't top up yet. And if you are planning to enter a new position, postpone that plan also. Wait for the fantastic four signals to show themselves. You've heard my technical analysis for these 10 stocks today in preparation for the last trading day on Friday. If you have some questions, please ask in the private clients forum. Again, for the Davao-based traders, investors, and subscribers of Equilist Analytics, I'll see you on July 27 in Davao at the Hotel Uno. If you're subscribed for 1 year, make sure that you buy your ticket at 50% discount. You are entitled to a 50% discount. Now, for the Pampanga-based, Baguio-based, and Cebu-based traders who did not make it with the recent Evergreen Strategy in Investing the Philippine Stock Market or Trading the Philippine Stock Market seminar, I suggest that you buy your ticket as early as now. So this next seminar will be next year already. So January 25 for Baguio, February 29 for Pampanga, March 28 for Cebu. Take a look at the pricing here. Let me just demonstrate this one pretty quickly to you. If you're going to buy your ticket now, it will only cost you 2,000 pesos. If you're going to delay it until February next year, it will cost you 9,000 pesos. So buy your ticket now, as early as now, so that you can save a lot. Okay? Alright, so there you go. I hope to see you in the next the Evergreen Strategy in Trading the Philippine Stock Market seminars, because that's a prerequisite when you subscribe here. You have to attend that so that you can understand very well the methodologies that we are using here. Okay, thank you and bye for now.